The first week of June was one of the most stressful for global markets this year. After the release of the U.S. labor market reports, it became clear that the leading global economy is cooling down under the pressure of high interest rates. However, the June non-farm payrolls data showed a rise above forecasts. At the same time, unemployment and wage levels also advanced in the United States. Both suggest that the U.S. regulator might cut the interest rate as early as September. Notably, Fed Chair Jerome Powell will provide speeches on July 9 and 10. Some other officials of the Fed Reserve will also speak this week. Nevertheless, traders will be mainly focused on the events that took place yesterday and that might happen in the coming days in France. The left-wing political alliance unexpectedly won the majority in the second round of parliamentary elections. This may lead to a confrontation between the president and parliament, thus severely worsening the country's financial situation. Consequently, this could weaken the euro. At the same time, the US dollar is also losing value amid a possible rate cut in the US in September. Moreover, we should take into account the influence of the other currencies on the US dollar index, which is determined, among other things, by macroeconomic statistics in those countries. Let us find out which publications to pay attention to in Tuesday and Wednesday, July 9 and 10. You are watching Traders Calendar. After President Macron's coalition was defeated in France, the United Kingdom now looks like an island of hope. The new Prime Minister, Keir Starmer, promised to rebuild the British economy brick by brick. The forecast for the macroeconomic statistics to be published on Tuesday are also optimistic. Retail sales are expected to rise by 0.7%. Since consumers drive the economy, this increase will positively affect the British pound. The same can be said about producer confidence. It shapes business activity and the final product price. In this regard, the situation in Australia is unfavorable. The business confidence index not only fell to its lowest level in 6 months, but it may also enter negative territory for the first time since November last year, dropping to minus 0.3%. As the sentiment in Australia's manufacturing sector falls, the country's currency is likely to drop as well. While other economies show a direct relationship between statistics and currency rates, Japan's situation is more complicated. For instance, on a Wednesday, July 10, the producer prices report will also be published. The indicator is expected to rise by 3%, given that May's figures jumped by 2.4% year-on-year, reaching the highest level since August last year, and new increases are quite possible, especially since wages increased across the country in the second quarter. Incidentally, the Bank of Japan is looking forward to wage growth. Meanwhile, it also expected inflation to fall to the targeted level of 2% to start implementing a more stringent monetary policy. If producer price inflation rises, the Japanese yen is likely to lose value against the US dollar. At the same time, in China, the situation is a bit simpler. If producer prices rise, the country's currency strengthens. However, the indicator is still in a negative territory and was around minus 1.4% in May. What's more, factory prices have been falling for 20 months already, indicating a downturn. Last month, the decline was the most substantial since February 2023, and this occurred despite numerous support measures from the Chinese government. However, June forecasts suggest a rise of 0.4%, and this will undoubtedly be a positive signal for the recovery of the world's second largest economy. We will monitor the market reaction to the above-mentioned reports, subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.